Hi everyone and hi to our lecturer, Madam Nofaisa Binti Akil. So we are going to present Islamic capital market. First of all, we are going to introduce ourselves. My name is Stephanie Busak Yahya and this is my teammate.
My name is Natalie Jonathan.
What is capital market? Capital market refers to the venues where funds are exchanged between suppliers and those who seek capital for their own use. Suppliers in capital market are typically banks and investors, while those who seek capital are business, government, and individuals. Capital markets are used to sell different financial instruments, including equities and debt securities.
What is Islamic capital market? A market where a capital market transactions, operations, and activities are carried out according to Sharia principles and requirements. And the term Islamic has been added to the term capital market to emphasize the fact that transactions within such a market must be free from the involvement of prohibited activities in Islam.
The main functions of ICM, Islamic Capital Market, is they provide a platform for demanders and suppliers of funds to trade in financial instruments as a means of raising large amount of financings or for long-term investment. The Islamic capital market is a subsector of capital market that promotes Sharia compliance securities instruments as alternatives to conventional ones and provide investment opportunities for a wide range of investors.
Next is the objective. First is to transfer funds from surplus to deficit unit. This is to ensure the equitable allocation of capital to sectors which would yield the best of returns to the owners of capital and hence contribute towards the overall growth and expansion of the economy. And next is to ensure that there exists a means of attracting surplus funds for worthwhile investment. This is to ensure that there exists a means of attracting surplus funds for worthwhile investment in accordance with the owner's preference in terms of extent of risk involvement, rate of return, as well as the period of investment preferred. Next is participants of Islamic capital market. First is issuer. These are government agencies, supranational bodies, or corporate entities who issue products such as sukuk for raising capital or funds to finance projects or expand businesses. Next is investors. These include retail or high net worth individuals, corporate bodies and governments or government agencies who provide funds for the purpose of investment and in exchange for some income. Next is intermediaries. These are firms registered by the Securities and Exchange Commission to provide specific market functions. Examples of market intermediaries include issuing houses and brokers, dealers, trustees, and solicitors.
The next participant of the Islamic capital market are advisory or certification board. This is a unique market participant that provides a critical role under the Islamic capital market. Typically, they are registered individuals or corporate entities with expertise in Islamic commercial jurisprudence. The certifications of an advisories or certifications board is essential for any product issued in the ICM to be acceptable. And the last participant of Islamic capital market are regulators. These are agencies statutorily empowered by law and charged with responsibility of ensuring market fairness and investor protections. One of such regulators is Security and Exchange Commissions. There are 6 roles of Islamic capital market. So the first role is interference between demanders and suppliers of funds. The second role is play a complementary role to the Islamic banking and takaful sectors. The third role is provide opportunities for diversifications of risk.
Role number 4 is facilitates the available of liquidity by enabling secondary trading of security. Role number 5 is makes available various financial services. And role number 6 is contributes to economic growth.
Next one, we move to key operations. One of the prominent operations in the Islamic capital market is issuance of sukuk. Instead of paying interest, sukuk represent ownership in underlying asset and investors receive a share of profit generated by the asset. Sukuk are Islamic bonds structured to generate returns without violating Sharia principle. They represent ownership in a tangible asset, project or investment rather than debt. The second key operations of Islamic capital market is Sharia compliant securities. Sharia scholars on board review financial products and transactions to ensure the compliance with Islamic principle. Financial instrument in the Islamic capital market adhere to Sharia principle. Sukuk Islamic bonds, mudarabah, profit sharing, and musyarakah partnership are examples of Sharia compliance instruments that provide alternative to conventional debt-based instruments. The third key operation of Islamic capital market is Islamic Unit Trust Fund, a collective investment scheme that offers investors the opportunities to invest in a diversified portfolio of Sharia compliant securities, fixed income securities, and money market instruments. Investment funds operate in compliance with Sharia principle, investing in assets that adhere to Islamic financial rules. These funds may include equity funds, real estate funds, or other investment vehicles that align with Sharia guidelines. And the fourth one is Islamic Real Estate Investment Trust, or we call ISRI. Real Estate Investment Trust is a collective investment scheme in real estate that combines the best features of real estate and trust fund. IREIT is the Sharia versions of conventional REIT. Investors can participate in real estate investment without involving interest, and profits are distributed in Sharia compliance manners.
The key operation number 5 is mudarabah and musyarakah. Mudarabah and musyarakah are partnership structure commonly used in Islamic finance. Mudarabah involves a partnership where one party provides capital and the other party manage the investment. Profits are shared according to a pre-agreed ratio, but losses are borne by the capital provider. Musyarakah is a joint venture where both parties contribute capital and share profits and losses based on an agreed open ratio. The sixth one is Islamic derivative. Islamic finance has developed Sharia compliant derivative instruments that adhere to the principle of risk sharing and avoiding speculative transactions. These instruments are designed to provide hedging solutions without involving elements that are inconsistent with Islamic principles. Number 7 is equity investment. Investing in shares of companies is generally considered Sharia compliant as long as the business involved comply with Islamic principles. Companies involved in activities such as alcohol, gambling, or pork-related products are typically avoided. Number 8 is takaful Islamic insurance. Operates as an Islamic alternative to conventional insurance. It adheres to the principle of mutual cooperation and shared responsibility, ensuring that risk is shared among participants. Islamic capital market includes takafuls, which is an alternative to conventional insurance. Takaful operates of on the principle of mutual cooperation and risk-sharing with policyholder and contributing to a funds that is used to compensate those who suffer loss. The conclusion is, the Islamic capital market stands as a unique and involving financial ecosystem that adheres to Sharia principles, providing an alternative to conventional financial systems. Through its emphasis on ethical and socially responsible investments, the Islamic capital market fosters economic growth while ensuring wealth distribution and social justice. Thank you. That's all for our presentation.